Good morning, traders and investors. Roger Scott here. Today is Friday. It's August 11th. Welcome, welcome, welcome. It's about 7:57 in the morning. The market's going to gear up to open up in about, an hour and 33 minutes to be exact with you. Happy Friday, everyone. We're going to talk about where Algos have been hitting it, top stocks, and all the other good stuff. Make sure to like this video, subscribe to our channel, subscribe to our Telegram channel. Go to rogerscott.com/Telegram or hit the link below this video. And most importantly, join me in my VIP room. I opened it live Thursday and Fridays, 11 a.m. Eastern Time. Today's Friday, 11 a.m. Eastern Time. I hope to see you there. Get your questions, write out all your questions, and I'll answer them live today at 11 a.m. Most importantly, comment below this video. It's Friday. I've got to have something to do this weekend. All right, let's get into it. So Nasdaq is down about 18. The Dow's up about 10. The market is flailing. It's not doing so well right now. It ain't doing pretty at all. CPI yesterday was not bad. It was actually pretty good. It was a little bit better than expected. 4.8. They got 4.7. Year over year on the blockbuster number, 3.3 versus 3.2. Not bad at all. Today, we've got the second part of the story. We got the Producers Price Index. And the number we're looking at is the year over year ex food and energy. We're looking at 2.3%, possibly 2.1, 2.4. I'm hoping the number is a little bit lower so the trajectory could stay in the same way and we can get a little bit of a relief from the bond market, which has been putting a lot of pressure on stocks. Year over year, we're looking at 0.7. Notice last time year over year it was 0.1, so they're actually looking at a higher number, hoping the number will be lower. But honestly, the only number I'm really focused on is the year over year ex food and energy. This is what the Fed looks at, and I'm hoping the number is just slightly lower. Even if it's 2.4, it's okay, but as long as it's not 2.5, 2.6, 2.7. In other news, you have consumer sentiment. I don't think consumer sentiment is going to really do anything unless it's completely out of whack, because you've already had the CPI and PPI. That's going to overshadow consumer sentiment. But just so you have it here just to be complete and be thorough, 71.3. They're expecting 67.5 versus 74, so nothing crazy there. Now, where are the algos hitting everything right now? I want to show you this because this is really important. So the algos have been very busy beavers this week. Algos have been driving healthcare to close to, let's see here, is this a 1 year? No, it's not a 1 year high, but it's an 8-month high. And notice we're at this resistance level where we've hit several times. If you go a little further, you could see that this is close to the high. So if we go up another couple of levels, just another couple of levels, we will be, let me put a green here, we will be at a fairly good place. So I'm kind of liking where we're at right now, but I'm cautiously optimistic because we've hit this level several times, 1, 2, 3, and there's a lot of resistance there, and the market's not looking all that rosy. I mean, look at the Dow right now. So the first sector that algos have been hitting hard, really hard, have been the healthcare sector. They've been sprucing it up because healthcare do pretty good when interest rates go higher, and interest rates have been going higher. The second sector that algos have been hitting really hard this week, especially after that Finch report, the lowering ratings on Moody's, and last but not least, earnings that haven't been amazing. And then the Fed saying, well, we may be around here longer. Interest rates have been going up. Interest rates have been going up is causing a sell-off in the bond market, and algos have been hitting this sector really, really hard. Now, we bounced a little bit right here, as you could see, but I think we're going to be coming back down, and that puts more pressure on technology and consumer discretionary stocks, which brings me to my third sector. My third sector happens to be the utilities, the Nasdaq 100. The Nasdaq 100 has been getting hit really hard especially this week, the last 5 days. If you look at at technology, sorry, I got the wrong ticker. If you look at technology, you could see it clearer here, but it's really took a dump. It's almost at our level, at our target level. We're not there yet, and if it breaks this level, kaboom! Yes, I said kaboom! It's going to go all the way down to the next level, and that next level is not till right here. There we go. So we're only a little bit away, but algos have been hitting Nasdaq really hard. Now, what sector have they been moving out of as well? Utilities. So the upside has been in healthcare, right? They've been moving into healthcare, which is a very that and energy are the two most defensive sectors. Energy's been hitting hard to the upside. I like that. But that's been mostly driven by futures market, not algos. But if you look at algos, QQQ to the downside this week, big time. TLT to the downside, big time. Utilities, yes, utilities to the downside, big time. Because if interest rates go higher, investors take their money out of utilities for dividend yield and put them into bonds because government bonds are safer. So, ba-boom, kaboom, ba-boom, whatever you want to call it. Nice little reversal here. But they've been hitting it really hard for 2 weeks now. So utilities and bonds, as you can see here, have both been in the crapper because of higher rates. And same thing with technology. And again, the only reprieve we've seen has been in the healthcare sector, which has been driven higher, and energies. But energies, it's not algos. It's the underlying asset. It's the oil fund. So QQQ's been getting hit hard by algos this week. The bond market's been hitting hard by algos this week, and it may continue to get hit hard if the PPI is not as good as we expect, or if it's really good, right? So it can go both ways. And blue chips, the Dow has been hitting hard. So it's been a very tumultuous week. Utilities to the downside, bonds to the downside, QQQ to the downside, healthcare and energies to the upside. Now let's talk a little bit about the global economy so we could talk about what to expect. And I'm also going to give you a couple of small cap stocks to play with today. And I'll give you some direction. What do you think about that? So let's talk a little bit about the economy, shall we? So 3 major U.S. benchmarks, the Nasdaq, S&P, and the Dow, finished slightly higher as milder than expected CPI readings and anticipation of a PPI and the end of earnings for large caps have finally given the market some path. I'm not happy with what I'm seeing from technology. Core CPI eased, which gave the market a little bit of a help yesterday, a little floor. Jobless claims were fine. As long as we're not in the 275, 300,000 range and we're okay. Now, here's where we get to the good stuff. Mary Daly acknowledged in an interview on Thursday that recent inflation data had been moving in the right direction. However, it's a big however. She added central banks still has more work to do. Whether we raise another time, hold rates steady for a long period of time, those things are yet to be determined. They want to see the impact of what they've done. And it would be premature to project what I think would happen because there's a lot of information coming in between now and our next meeting. And I'm going to tell you something. This is probably the most honest statement I've seen in a very, very long time. Why can't Powell talk this way? She's just telling you the truth. That's the truth. Just say the truth sometimes. It's okay. It's okay. Just be honest, Powell. Nobody's going to bite you. Nobody's going to make fun of you. I'll still call you squirrely, but be honest. They're in a wait-and-see mode. They're going to see what will happen next. There's still a lot of work to do. That's the truth. That's the truth. There's now a 90% probability of no rate hike in the foreseeable future, and today you'll see a PPI. The Fed is not saying they're not going to raise rates. There's probably a 75% chance, 80% chance they're going to raise rates in the next 2 months, but they're just waiting to see the impact because there's a lagging delay. There's a delay between the time they make the decision and the time it has impact on the economy. We've got PPI in a couple of hours, and we've got consumer sentiment. Again, consumer sentiment is a huge report, but after the CPI and PPI, I don't think it'll carry that much weight. Tracking weakness in Asian markets while hawkish comments from San Francisco. Daly also weighted on sentiment. She was just being honest, and I wish Powell was honest sometimes. He likes to take garbage and make a candy out of it, which isn't really very smart, but what do I know about Powell? So China closed sharply lower in ongoing concerns over the deceleration in the country's economic growth, exasperated by a series of lackluster economic readings this week. In a nutshell, they're pushing the world economy down. Apprehension regarding property market meltdown, fueled by reports indicating the country's biggest developers were encouraging difficult times to meet their obligations. China's not doing well. And again, it's not a maker or breaker, but if you're a weak person and somebody tells you to go swimming and they give you a 50-pound barbell, you'll probably drown. And if you're a strong person, you may survive. But we're vulnerable right now, and this is adding that dumbbell to us. Large cap earnings are done. I'll talk about it in my VIP room. For the most part, they're better than expected. I'll give you a full update if you join me in my VIP room today at 11 a.m. And the link is posted above and below this video, regardless of where you're watching it. Now, today is Friday, and I want to give you some. I want to give you guys some goodies so you could see exactly what stocks are, where not stocks, the sectors, their things are moving right now. So in the short scheme things, money's coming into energy and healthcare. I wouldn't put a lot of weight in consumer discretionary communication right now. I honestly wouldn't, because they're very tied into technology, and they're tied in to the broader QQQ, which are both right here at the bottom with the small caps, which makes perfect sense. And I told you small caps were going to be selling off, and they were. On a longer term basis, you still got energy and healthcare here, and the Dow, which is fine, and consumer staples. But look at where technology is. Look at where QQQ is. And on a cumulative basis, technology is still down here, which is why I would avoid communication services. But I like financials. They actually did pretty well in light of the banking fiasco. Stick with the smaller banking stocks. They seem to be coming back, roaring back. Be careful with insurance stocks right now. But I like energy, I like healthcare, and I like financial. And I don't like technology, and I don't like utilities, and I don't like technology and small caps. Just don't. I would stay away from small caps, technology, and utilities. Now, when I say small caps, I don't mean the stocks we're going to talk about in a few minutes or a few seconds. Those are specific event trading stocks. So somebody asked me, I give you guys my day trading stocks, my fast day trading stocks, and somebody says, Roger, well, how would you trade this? Well, let me show you how I would trade this. So here's ETON. The stock is up right now 30% pre-market, and if you look at an intraday, you'll see it just gapped up, and it's moving. It's moving right now. So here's what I would do. I would wait for now. This is a low float stock. The float in this company is only it's got what is it? 66. It's a $60 million stock. It's not a big capitalization is very, very small, 66 million. It's a tiny company, tiny company, which means it could move 30, 40, 50%. And volume today is already pretty high. But in this case, here's how I would play this. I would wait for the stock. I would wait for the open. And I would look at the trading range for the first 5 minutes after 9:30. And then I would look at the high, and I would look at the low, and I would put a buy stop and a sell stop, and I would go in one of the two directions, whether the breakout or not, but I would give 5 to 10 minutes after the opening bell to see which way it goes. More likely than not, the stock will start coming down because there's just not enough buying pressure, but it could come up all the way to the $4. But this gives you something to play with in volatility. So wait 5-10 minutes, wait to see if it starts breaking up or down, and go in that direction. So that's the first stock. That's ETON. And my bet would be coming back down. Major trend is down, coming down. I would probably only trade this to the downside. So I'm just telling you right now, which means we'd have to see it break below 323 to the downside, and I would take my profit somewhere around $3. That's the first one. The second one is ACHR. Now, this is Archer. The stock is up 22%. Now, in this case, it's a different story. Why? Well, this is a perfect example. The stock is breaking up, not like the previous example where the stock is breaking down, right? So if it's breaking down, you want to go down. And if it's breaking up, you want to take the upside trade. So in this case, notice it rallied. Now it's selling off. What I would like to see is, I would like to see it again. I'd like to see it first 5-10 minutes of the day, maybe even 20 minutes. And then I want to see if the stock continues breaking higher above the high or starts breaking into the low. Now, I would be much more inclined to take this stock to the upside because the trend has been bullish. But if it really starts breaking, and also if it just starts trading in the middle, you can also apply these rules the last half hour of the day. They work really well the first half hour of the day and the last half hour of the day. So you could put your buy stop here, and you could put your sell stop right here and see which way it goes. And I would go with the long-term trend. There's no overhead resistance for the stock as far as I could see. The stock is breaking above a 9-month high. So I would continue with this positioning here, assuming it's going to break higher instead of lower. But if it doesn't, then you could fade it all the way down. And if this thing starts breaking, it's got to good till about $5, and then it'll break lower. That's the second one. And here is Max N, the last one. These are stocks that I like to give you guys. And this one opened lower. If you look at the long-term trend, you'll see the long-term trend is down. But it's gapped all the way to its floor, to its support level right here. Right? Close enough, right? Close enough. 16, 15. So I would want to see if this stock starts filling in the gap to the upside. I probably would not. I would not trade it to the downside. So I would wait for the first 10, 15 minutes, and I would see if it starts breaking up or down. But usually these big moves on small caps, you want to fade them, not go with them. But you want to also pay attention to the major trend. Hopefully that was helpful. So my 3 stocks to day trade today are Max N, their ETON, and I think you have good ACHR. You have a good understanding of which direction they trade into. Now, before I let you go, and again, like our channel, subscribe to our videos, and comment below this video. Folks, the cat, and I'm not talking about Clyde this time, is finally out of the bag. The enigmatic Mr. X is none other than Garrett Baldwin. That's right. Garrett just pulled back the curtain on his new income strategy, and let me tell you, it's a game changer, folks. It's all about cashing in on those significant stock moves the top executives makes when they invest their own money in their own companies. Oh yeah, it's like that. Now think about it. When a CEO or a CFO puts their own money into the company stock, they could be onto something, right? I mean, they live and breathe that company ins and outs. They know what's going on. It's very unlikely to bet on anything less than solid upwards trend. But here's the kicker. Garrett is about to spill the beans on the next executive payout, and guess who's going to be there to introduce him? Me at 1 o'clock today Eastern time. That's right. I can't wait. I like Garrett. He's a great guy too, and he knows about the market. He's a trained economist. So hit the link below, save your spot, mark your calendar, Friday, 1 p.m. Eastern time. What's not to like? And my VIP room is at 11 a.m. I'll see you there. Bye. Have a great weekend. Comment below this video if you have any questions. Let me know how you like these day trading picks and the game plan I give you, and I'll talk to you later. Bye.